now. Shifting focus now to the personal finance segment, Hemant Rustagi of Wiseinvest Advisors is our guest for the day. And Hemant, we've got a special one coming up. This is with respect to mutual funds. What a lot of queries that the many queries that we've got from people is that with respect to investing in mutual funds, how should an investor decide between which option to pick for? Because you've got a dividend payout, you've got dividend reinvestment options, you've got a growth option as well. So which one is advisable for what? And also the other question I wanted to ask is, should one keep interchanging between these options depending on the market conditions?
No, before we go for that, when you discuss growth option, also tell us, how it would imply for an equity mutual fund and a debt mutual fund as well.
Sure, Lata. See, as far as selecting an appropriate option is concerned, I think it's a very, very important aspect of mutual fund investing. In fact, I would say it's as important as selecting the right scheme, but I think this is unfortunately one aspect which is generally ignored by the investor. So let's begin with growth option. As the name suggests, it allows investors to make their money grow over a period of time. So anyone who's looking to build his corpus over a period of time should be looking at growth option. And the reason for that is, in the growth option, whatever gains are made on an investment are remain invested in the fund itself, which means that one gets the advantage of power of compounding over a period of time. And that is very, very important, especially for someone who wants to build his corpus over a period of time. The second aspect is the growth option ensures that the returns that an investor gets actually becomes more tax efficient, and that depends on the kind of scheme that money is invested in. For example, if the money is invested in, let's say, an equity fund, any capital gain on an investment which is redeemed after a period of 12 months, the capital gains are tax free. And in case of debt fund, it is actually taxed at a concession rate of 10%. And in fact, there is another option for investors to claim indexation benefit. In a country like ours, where generally inflation is quite high, I think it makes sense to claim indexation. Now, for example, if the return from a debt fund is, let's say, 10%, and the inflation is at 8%, the tax has to be paid only on 2%, which is at 20%, which means 0.40. So the post-tax return turns out to be 9.6. Now, if you were to compare it with a traditional option like FD, even if you get the same return, 10%, and if an investor is in the highest tax bracket, he ends up paying 30% tax on that. So as against 7%, you get 9.6. So growth option is suitable for investors who want to make their money grow. As far as the dividend payout is concerned, dividend payout option is concerned, those investors who would like to receive dividend on a regular basis can opt for it. Of course, the frequency of the dividend that comes depends on the kind of fund one is invested in. If one is invested in, let's say, an equity fund, generally these funds will give you dividend once in a year. But if it is in debt fund, many of the debt funds have option of either getting dividend on a daily basis or a monthly basis or a quarterly basis. And the major advantage here is that the dividend that comes in the hands of investor is tax free. But in case of debt fund, the funds have to pay a dividend distribution tax, which for individuals it is 13.52. So for those investors who are in the higher tax bracket of 20 and 30%, I think there is a clear tax arbitrage. It's a great advantage for them investing in an option like a mutual fund. So I think that is as far as the dividend payout is concerned. And dividend reinvestment, it's a mix of these two. What happens is that the dividend is declared, paid, and reinvested at the post-tax NAV. Now, every installment of dividend that comes for the investor, which is reinvested, has to remain invested for next 12 months for it to become, the gain to become tax-free. I don't think it's advisable for investors, especially who invest for the long term, to look at dividend reinvestment. It's ideally, suitable for investors who want to park their money for a couple of months in funds like liquid fund or ultra short-term fund, because there, if someone who is in the higher tax bracket of 20% and 30%, the fact that dividend distribution, especially in ultra short-term, is 13.52, it makes a great sense to look at dividend reinvestment. So clearly, depending on what one requires, the way the return one would like to have from the mutual fund should decide which option to go for. Well, as far as changing options are concerned...
Yeah, no, one minute. Before we go to that, what would they be called, Hemant? Would all the dividend option funds be called income funds? Because often what a mutual fund guy sells to you is just the name. So from the name, how do you identify which is what? Is it growth? Is it dividend? Is income fund per se a dividend paying fund? Okay. Well, Hemant, what I was asking you is, what is the nomenclature normally used for a dividend fund? A fund which reinvests, which pays dividend is called an income fund?
Yeah, there are different variety of debt funds. You have these liquid funds, you have ultra short-term funds, you have short-term debt funds, you have income funds, you also have debt-oriented hybrid funds called monthly income plan. So I think in fact, not only debt, like I mentioned earlier, even equity funds give dividend. But the frequency of that, cannot be pre-decided, because, in case of equity fund is whenever the fund manager books profit, and then he pays dividend out of that. Whereas in case of debt fund, because the money is invested in interest-bearing securities, okay, the fund manager can be more sure of at what frequency he can pay the dividend. That is why one gets to choose, frequency of whether it is going to be monthly or, quarterly or sometime even annually. So all the funds have these options.
All right, Hemant, let's take a break. We will have viewers joining us in a minute. All right, and now we have a lot of callers who will ask Hemant Rustagi questions on what they expect, what they should do with their own investments. Do we have the first caller in? Yes. Kapil Arora is calling from Pune. Go ahead, Kapil.
Hello, ma'am.
Yes.
I used to invest in SIPs earlier and always opt for the growth plan, but now I have certain responsibilities for which I need cash inflow. So is there, should I invest in the dividend plans, and if that, then should I go for yearly, monthly, quarterly?
Okay. Yes, Hemant, precisely the question. If I want money on a monthly or quarterly basis, what should I do? Switch out of growth funds?
Yes, as I mentioned earlier, every fund has these three options of growth, dividend payout and dividend reinvestment. Depending on, there are two things have to be looked at. One is you decide your asset allocation first. You decide whether you want to invest in an equity fund or a debt fund, or you want to invest in a hybrid fund. That is the first step. Thereafter, you need to assess as to how you would like to receive your returns. Whether you would like to have a regular dividend, or you would like to have a growth, or you want to have both. So in this case, Kapil, because you said you have been investing in the growth option, you must have accumulated some corpus. Yes, definitely opting for a dividend payout will be a clear, strategy to get regular dividend. But if you have been investing in, let's say, equity funds, there the frequency of the dividend is not decided. The fund may give you dividend once in a year, and if your requirement is on more regular basis, then you have to necessarily look at bond funds or debt funds. In that you have different categories. You have, one of the category is monthly income plan, which is a debt hybrid fund which invests in equity and debt. 20% is invested in equity and the rest is in debt. You have an option of either opting for a monthly dividend, which means that every month the fund will give you some dividend, or you can opt for a growth option if you want your money to grow. Since in your case, your requirement is of regular dividend, you need to also choose the right fund. By just merely changing option in an equity fund may not give you the kind of money that you require regularly. Another option for you is that you can set up a systematic withdrawal plan. Now what it does is you give standing instruction to the fund house saying, you redeem X amount of money every month on this date and the money will come to you. With this, what happens is that you are assured of getting a regular amount, whatever your needs are, that can come through SWP. So the key factor is decide the right kind of fund based on the asset allocation, then you choose options. So every fund, like I mentioned earlier, will give you these options of dividend, dividend reinvestment and growth. Choose the one that suits your requirement, and within dividend payout, there are different frequencies which are allowed. You can actually look at monthly dividend, you can look at quarterly dividend, and some will give you even half-yearly dividend.
All right, Kapil, I hope that answers your question. And Hemant, thanks so much for joining us. But remember, viewers, we've got a very interesting session lined up on Monday.